Due to the current worldwide pandemic and ensuing shutdown, the mortgage interest rates recently hit historic lows. You are probably even getting letters in the mail touting how much money you will save if you refinance. You may think now is the perfect time to refinance. Maybe it is, but there are some hidden secrets the lenders do not want you to know. I will cover all these secrets and how you can make sure that you are not getting screwed over by the lender. All this and more in today's video. Hello and welcome to Stephen Carlson Show. I'm Stephen Carlson. I'm a tech entrepreneur, real estate investor, author, YouTuber, volunteer paramedic, and once again, this is Clyde. Clyde, lay down. Lay down. I will come out of the gate and say it. A refinance can be a great thing for some people and a horrible idea for others. The key is doing your calculations and determining if it's going to work out for you. The problem is how to find reliable information online to guide you through the process. If you do a simple Google search, you will find hundreds, if not thousands, of websites showing how simple the refinance process is and how much money you can save over the life of your loan. First off, it must be considered who's making these websites. Usually, most of these articles are on lenders' websites. So think about it. Of course, they're going to say it's a fantastic deal. Before I go over the different use cases of when a refinance makes sense, a quick disclaimer. As my regular viewers will already know, I have a team of outstanding lawyers that are chained up in my basement, and they get a little bit rowdy whenever I'm in the studio making a video. The only way to calm them down is to clarify to you that I'm not a lawyer, I have no certifications, I'm not a certified financial advisor, blah, 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 blah. I'm just some random dude on the internet. Don't sue me. You get the point. Also, don't forget to check out the Webull link in the description box below to claim your 3 free stocks valued up to $1,600 each. Okay, with all that out of the way, when does refinancing make sense? First, you must ask yourself, how long will you stay at the property? If less than 3 years, most likely refinancing is just going to be a completely waste of time and money. Now, there is one exception to this, which I'll cover later on. If you are planning on staying in the house for at least 3 more years, now is when you need to figure out your break-even point. When you refinance your loan, the lender will charge you fees. Plus, there will be fees for title, court filing, etc. While these vary from location to location, a reasonable estimate is about 1 to 2% of the loan. So if you are refinancing a $300,000 loan, you can expect to pay anywhere from $2,500, $3,000, maybe up to $6,000. Unfortunately, you will not know the exact amount of these fees until the closing. But you can get a close approximation up front, and this brings me to my first tip. Shop for lenders. I know this sounds obvious, but you can contact the bank directly, or you can contact a local mortgage broker, or even use one of the large nationwide companies like Rocket Mortgage. Whomever you choose to contact, ask them to email you the following. 1, their 0-point rate. Number 2, their point schedule. And number 3, their fee schedule. Why have them emailed? Well, that way it's much easier for you to compare multiple quotes when you have everyone's fees listed right in front of you, instead of having to rely upon your memory. Then move on to the next lender and get the same information from at least 2 or 3. You must contact these lenders on the same day, and I'll explain why in just a minute. But first, what exactly are these items that you're asking for? The 0-point rate is the current interest rate the lender is charging without any points. By stating a 0-point rate, there is no confusion when you're comparing rates. The last thing you want to do is get one lender quoting you 3.25% with 0 points and another quoting 3.15 with 1. Then it is far more complicated for you to compare these numbers. Save yourself the headache and compare all of them with the same 0-point rate. At closing, you could choose to pay or get paid points to either lower or raise your interest rate depending on what you need. I have a video coming out in a few days showing how you can have lenders pay you points to close your loan and a few other hidden secrets that will save you tens of thousands of dollars on your loan. Make sure you subscribe to my channel so you'll be notified when that video comes out. Remember a minute ago when I told you it was essential to contact the lenders on the same day? Here's the reason why. The rates change every day based upon the market. For example, if lender A quotes you 3.5 today, then 3 days later, lender B quotes you 3.25, you may think that lender B is the better option. But in this example, what if the entire market rate had actually dropped to 3.0, but lender B is still charging you 3.25? You are mistakenly paying 0.25 higher than you should have because you didn't compare the rates all on the same day. Now back to the list of items that they have emailed you. The fee schedule will let you know what they charge for appraisals, inspection, lender fees, broker fees, credit check fees, etc. All of these quickly add up, but honestly, don't get overly worked up over them. Of course, it's good to compare, but I would be far more concentrated on paying a better interest rate that you're going to be paying for the next 30 years versus a one-time $100 cost. Remember, in the long run, these fees, while annoying, really don't change your calculations on if a refinance is worth it for you over a 5, 10, or more year period, as they only end up costing you an extra $1 or $2 per month. Of course, if you can save on fees, go for it. Now that you know your interest rate, which hopefully is less than your current rate, if not, then why the heck are you trying to refinance? Anyways, let's presume your current interest rate on your current loan is 4.25%. And now with a refinance, you are at 3.25%, a saving of 1%. Using the most basic calculations off a paper napkin, that's about $3,000 per year savings. Remember, 1% of $300,000? You're still with me, right? Yes, I know, these loans are compounded daily, but for simplicity's sake, you can still use simple interest to illustrate the concept and determine if a refinance will save you money or not. In this example, if your closing costs were $6,000 and you were saving $3,000 per year, after 2 years, you're at your break-even point. By year 3, you've saved $3,000. By year 4, you've made $6,000. You still with me? Okay. Now, let's compare another refinance. If you are at 3.45% on your current loan, but your new quote is 3.25%, you're saving about $600 per year. In this example, it would take you 10 years to break even. Then in this case, it's probably not worth doing. Now you may be thinking, but my lender told me that they offered no closing cost loan. That's what I'm doing. Well, what that really means is they are taking the $6,000 and they're wrapping it into your loan. So now instead of owing $300,000 on your house, you owe $306,000, and you're paying interest on that higher amount. Remember the old saying, there's no such thing as a free lunch. In the end, you're still going to pay that $6,000. Now don't get me wrong, I'm not saying refinancing is always bad, quite the opposite. You just need to sit down and perform the necessary calculations to see if you're going to save any money based upon the projected interest rate savings, the extra costs incurred because of closing, and how long you plan on staying in the property. While I'm not a financial advisor, remember the lawyers and Clyde want me to say that, but in my opinion, if you're someone that plans on staying in your home for at least another 5 years, the national average is 7 years before they move or refinance. Anyways, if you're going to stay there for at least 5 years and you can break even on your refinance costs within, say, 2 years, then you have 3 years of additional profit. Then, in this case, a refinance is probably a very good idea. Now, one more tidbit for you to remember. The Federal Reserve has said they plan on leaving the interest rates at their current level for the next 2, 3, maybe up to 5 years. After that, presumably, they will begin increasing rates. Of course, it's almost impossible to predict the future, but we can reasonably state that today is about as low as the rates will be for probably the rest of our lifetimes. Now is probably a great time for you to lock in your rate for 15 or 30 years. Oh yeah, one more thing. Should I make a video explaining why 15 years versus 30 years probably is a better idea for you? If so, comment down below and let me know. Thank you very much for watching. Please make sure you click like and subscribe. Doing so really helps the YouTube algorithm. I appreciate it, and I'll see you on the next one.